All right, crypto fam, Bitcoin Bulletin is live, and we've got a packed show for you today. Get ready for a whirlwind tour of the latest market-moving news. First up, we're diving deep into Bitcoin's cautious dance around the $110,000 mark. Is this a pause before a massive surge or a sign of things to come? Then, hold onto your hats because we're breaking down the latest price action for Bitcoin and Ethereum, with experts weighing in on what's driving the market. But wait, there's more. We're also exploring a massive $7 trillion cash pile that could be the fuel for the next big rally in Bitcoin and altcoins. Could this be the catalyst we've all been waiting for? And finally, we'll be looking at the latest economic indicators and what they mean for your crypto investments. Get ready to subscribe and hit that notification bell so you don't miss a single update. Bitcoin is treading water, but is it gathering strength? Despite holding firm above the crucial $110,000 level, Bitcoin's price action is showing a distinct lack of conviction, leaving traders hesitant. This cautious consolidation follows a period of dramatic surges, and the market is left wondering about the true direction of this digital asset. While the price has rebounded from lows near $108,000, the underlying sentiment in derivatives markets remains defensive. The options delta skew, currently at 9%, indicates that traders are paying more for put options than call options, a clear sign of increased demand for protection against potential downturns. This trend was amplified on Monday with a surge in demand for put options, signaling a preference for neutral or bearish strategies. Futures contracts reveal a similar story, with funding rates at a neutral 11%, a step up from Sunday's bearish 4%, but still indicating limited appetite for risk. This cautious stance is particularly striking when compared to traditional markets, where gold and the S&P 500 are hitting new all-time highs, while Bitcoin struggles to regain its bullish momentum. This dichotomy is a reflection of the broader crypto market sentiment. An asset that can defend its support levels, but seems unable to reignite the explosive growth that captivates the masses. Adding to the complexity, Bitcoin ETFs have seen significant outflows totaling $383 million over 2 days, suggesting institutional investors are pulling back. Yet, paradoxically, companies like Strategy and Meta Planet are capitalizing on the volatility, acquiring substantial amounts of Bitcoin. Analysts like Daan Crypto Trades remain watchful, anticipating a potential sweep of monthly lows that could trigger fear around the $100,000 mark, while also identifying support zones for potential long positions. However, warnings about bearish divergences and potential volatility spikes, particularly around Fed decisions in late September and October, add layers of uncertainty. Don't go anywhere, because the charts are telling a story of their own, and we're about to break it all down. Next, we'll explore how Bitcoin and Ethereum are reacting to the latest economic whispers. Bitcoin and Ethereum hold steady as experts eye potential U.S. rate cuts. The cryptocurrency market is experiencing a period of consolidation, with Bitcoin trading around $112,000 and Ethereum at $4,313. This stability comes as investors and analysts closely watch upcoming U.S. economic data for clues on the Federal Reserve's next move regarding interest rates. Key economic reports on the horizon include revisions to non-farm payrolls, producer price index, and consumer price index. Positive inflation readings could influence the Fed's decision on rate cuts beyond September. Conversely, a significant spike in inflation might prompt traders to reassess their positions in risk assets like cryptocurrencies. Greg Magadini, director of derivatives at Amberdata, highlighted that inflation remains the critical unknown variable in the Fed's rate path equation. He noted that while current efforts might keep energy prices down, sustained inflation expectations could create market havoc without a credible Fed mandate. Adding to the market's uncertainty is the convergence of VIX futures expiration on September 17th, the same day the Fed announces its interest rate decision. This timing could amplify volatility, with September VIX futures potentially pricing out risk while October remains a wildcard. Sean Dawson described the situation as a potent powder keg for volatility. suggesting that while expiring VIX futures might clear short-term hedging, the Fed's decision is poised to trigger a significant directional shock. Interestingly, Ethereum's derivatives data presents a slightly more bullish outlook compared to Bitcoin. This is supported by a sustained uptrend in cumulative spot volume and a notable overnight increase in open interest, indicating strong interest in the second-largest cryptocurrency. But what if there's a hidden treasure chest ready to ignite the next crypto boom? Prepare yourself as we uncover a massive cash pile that could be the catalyst for the next Bitcoin and altcoin rally. Is a $7 trillion cash hoard the secret weapon for the next crypto bull run? Analysts are buzzing about the staggering $7 trillion currently sitting in U.S. money market funds, a colossal sum that could soon find its way into assets like Bitcoin and other cryptocurrencies, potentially igniting the next major rally. These money market funds, typically invested in short-term, high-quality debt instruments, have seen their assets swell significantly. Initially attracting investors seeking safety during the pandemic's uncertainty, they later benefited from rising yields during the Federal Reserve's rate hike cycle. Even as the Fed began cutting rates late last year, inflows remained strong. However, the prospect of further rate cuts by the U.S. Central Bank is prompting a reevaluation. David Duong, institutional head of research at Coinbase, believes that as rates decrease, this vast pool of retail cash could be redeployed into various asset classes, including equities and cryptocurrencies. The CME's FedWatch tool suggests a high probability of at least a 25 basis point cut next week, with some anticipating a more aggressive 50 basis point reduction. Traditional market strategists like Jack Oblin, chief investment strategist at Crescit, echo this sentiment. He suggests that a dip in money market yields could incentivize investors to seek higher returns in stocks and crypto. Yet, the rotation isn't a foregone conclusion. The broader economic environment plays a crucial role. If rate cuts coincide with economic slowdown or heightened uncertainty, investors might opt to stay put in the relative safety and accessibility of money market funds, even with lower yields. Pseudonymous observer Endgame Macro views these massive cash buildups as potential indicators of impending economic pain, noting historical parallels with past market downturns. The key question, according to Endgame Macro, hinges on the magnitude of the Fed's rate cut. A modest 25 basis point move might lead to a gradual bleed-off of funds, while a more substantial 50 basis point cut could accelerate the shift, first into treasuries and then into riskier assets as the yield advantage diminishes. The sheer scale of this $7.4 trillion waiting on the sidelines makes the direction and speed of this potential rotation a critical factor to watch. But will this cash flow into crypto, or will economic clouds gather overhead? We'll break down the economic signals and tell you what it means for your portfolio next. Bitcoin's cautious stance persists as derivatives markets signal investor hesitation. Bitcoin is navigating a delicate balance, trading above $112,000 after a dip towards $108,000, yet confidence remains subdued. The derivatives market paints a picture of caution, with put options costing more than calls, indicating a defensive posture against potential declines. On Monday, demand for these protective put options surged, reinforcing neutral to bearish strategies. This sentiment is echoed in futures contracts, where funding rates, while neutral at 11%, are higher than the previous day's bearish 4%, suggesting limited risk appetite. This contrasts sharply with traditional markets like gold and the S&P 500, which are reaching new highs. Bitcoin, on the other hand, appears hesitant to reignite the explosive growth seen previously. This indecision is further highlighted by significant outflows from Bitcoin ETFs, totaling $383 million over 2 days, signaling institutional skepticism. However, some entities are taking advantage of the volatility. Strategy and Metaplanet have significantly increased their Bitcoin holdings, acquiring 2,091 BTC for approximately $230 million, representing a substantial portion of the week's mine supply. This strategic accumulation contrasts with the steady selling observed from whales over the past month. Analysts like Daan Crypto Trades foresee potential volatility, with a possible sweep of monthly lows testing the $100,000 support zone, while also identifying potential entry points for swing longs. Conversely, warnings persist regarding bearish divergences and potential volatility spikes linked to upcoming Federal Reserve decisions and macroeconomic factors. Despite these mixed signals, some observers like Cameron Asgar remain optimistic, pointing to parallel channel patterns that suggest significant growth potential, targeting the $140,000 zone. As autumn approaches, the market anticipates the traditional October rally, though some analysts caution about potential October crashes based on fractal models. Will this autumn bring a crypto harvest or a market freeze? Stick around as we give you the full rundown and our final market outlook. And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin holding cautiously around $110,000 amidst mixed signals, while Ethereum showed a slightly more bullish outlook. Experts are eyeing potential U.S. rate cuts as a catalyst, and a massive $7 trillion cash pile in money market funds could fuel the next big rally. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto news needs, hit that notification bell so you never miss an update, leave a comment with your thoughts on today's market, and follow us on all social media platforms for real-time updates. We'll see you in the next one.